I would say that the real risk in the game is for people around 2 years, 3 years in, when they're thinking that they've got it, they're starting to size up, and all of a sudden,
yeah, I remember those days.
Yeah, no, I mean, I still may be in those days. I'm not sure. I'm hoping that I'm out of them, but you have a 2K month, a 3K month, a 2K month, and then you lose 20 grand, and you just think, what the hell just happened? And then you need to reevaluate and think, is trading for me? Can I go through this game 12 more months to make this money back? Because you know you can, but you don't know if you can trust yourself. And that's where trading's risky. That's in the early days when you're learning with a small account. I think for me, paper trading, real trading doesn't matter. As long as you're trading small, the real risk is when you think you've got it.
Welcome back to the SteadyTrade podcast, everyone. Back here with Kim, back here with Steven. You know, we've came up with a topic that I think that is maybe on the tip of many of your brains or tip of your tongues, or I'm sure I botched that phrase, but you know what I mean. You're thinking about it. Many of you are probably coming to this podcast because you see these wild moves. Everyone's talking about the market. There's so much going on. And I mean, me personally, and obviously Kim and Steven will have their time to speak their piece too. But I mean, just for me, it's just, I started day trading in 2007, the financial crisis. Okay. I came to the markets because of the big market crash back then, back during the financial crisis, all the bailouts. And I came to the market because I was like, whoa, it's madness. And, you know, that's 12, 13, 14 years ago, whatever it is. And here we are in 2020, and it's just like there's no comparison, in my opinion. It's like, I think back to then, and it was like, hey, we'd have a few stocks running around. Now, I mean, you come in at 6 a.m. and there's multiple 100% runners trading millions of shares. It's just a completely different world out there. And probably the catalyst for this podcast would be a Wall Street Journal article. We'll link it. Now, it may be behind a paywall. I think that, you know, personally, if you don't subscribe to the Wall Street Journal and you're trading, seriously consider it. I don't have an affiliate link or anything, but I've been reading it since high school. I think it's one of the last good sources of information that, you know, what I like about the Wall Street Journal is they at least pretty unpartisan. Okay. Sure. You got the commentary or the opinion pieces, but it might be maybe the most unpartisan newspaper out there. But anyway, I'm done with the shilling, but check out the article called "Everyone's a Day Trader Now" on July 25th. And that's what we're going to be talking about today. And this really, I mean, we've talked about it a little bit on the podcast, how things have changed, but I didn't know the numbers. I didn't know that E-Trade, you know, I'm skimming the article. I believe they added more accounts in March 2020 than they did in all of 2019. I mean, and then you look at the Robinhood numbers, and there's just so many new market participants. Now, I think that's a great thing, because if you're willing to study, learn, be diligent, track your trades, have a trade plan, all the things we talk about on the SteadyTrade podcast, I mean, you listeners know I want what's best for everyone. I want all 7-8 billion people on the world to be healthy, wealthy, and wise. But at the end of the day, there's got to be winners and there's got to be losers. And I think if you study and you're diligent, might as well take the money from all these lazy people. What do you think, Steven?
There's too many points that I need to talk about and rattle off from that introduction. There's too many, and I don't think I'm going to remember them all. But the first thing is, what first hit me is there's 3 generations of traders here, and I'm not talking by age, I'm talking by experience. We have Tim Bohen, who's the literal veteran, and he was around in the slower days. And then you have me, and I'm somewhere in the middle, where I've experienced some of the slower days, but I've also seen a faster market than what Tim has experienced for maybe the first 5 years of his career. And then Kim, you are maybe the trader that best represents the new Robinhooders and the new E-traders, because you're in with that influx almost.
Yeah.
And it's very interesting to get three perspectives from three ages. The other point, the second point, I hope I can remember three, is if you've got terrible media, don't worry. You have the Guardians, the Financial Times, the Times, all brilliant British papers that you will all probably turn to when other things crumble in America, as they tend to. You'll turn to the British for help. And the third thing is...
That might be the best joke you've ever told.
It was so great too, because it was so subtle that we both were like, took a beat, and then we were like, oh, I can hear what he took.
Yeah, I have some sarcasm. No, and the third time, I can't remember what I was going to say, but it's just the greatest time of all time to trade. And yeah, the last point is the world in life is a zero-sum game, and you get in what you put out. And when I read that article, there's a lot of people who just think that they're going to get it easy and they've got no clue what's ahead of them. So study hard. If you study hard now, there's never been a better time where hard work will be. And that's it. And over to Kim.
I'm so excited. I'm excited for all of these people who now, it's really entrepreneurial. I mean, I really think if there's one thing I've learned in this past year with you guys, is that the entrepreneurial mindset is, if you are coming from that, you're going to have a much stronger chance as a trader. And being an entrepreneur is so hard. Like, you have to really be committed. And I think that is, in a way, I feel like all the traders who perhaps were here before this influx, who have really been diligent and been studying, you guys have such a chance to really excel in a way that, you know, that article that Tim is referencing is like, you know, a woman she's having initial good strides, the realtor, right? And the grandpa, like they're all gonna experience probably some luck initially. But if those are the people you're up against, and you guys are studying and listening to what Stephen has to say and listening to what Tim has to say, and, you know, listening to Tim Sykes' courses, like, you guys are going to be miles ahead of everybody else. So just like entrepreneurship, it's, you know, there's a great quote that says, entrepreneurship is the only place where you work an 80-hour week, so you don't have to work a 40-hour week.
Remember that. I mean, I maybe you've heard this story, Kim. Remember, that was the whole reason I sold my business, because I fell into that 80-hour week to not work 40 hours a week, you know.
Totally.
Yeah, that classic, you know, entrepreneurial mistake, you know.
Yeah, it's just a real huge commitment, and I do believe trading is that as well. Like, I do think that there's ways you can, like, you know, you guys have advocated to me that I have my full-time job, right, my own business, but how do I do this at the same time? But I think as long as you realize, okay, it's the easy entry that's there right now, which is fantastic. There's a low bar of entry. Just use wisdom, just use caution, and listen to the experts. Listen to the people who have been here long enough that know this may look, you know, like, what do you say, Tim, all the time about, like, there's no bar of entry, right? You don't, you can instantly.
You know, I've said it a million times on the podcast. All you need you can get a working laptop from Goodwill and drop $100 in a Robinhood account, and you can start trading today. Nobody will stop you. Yep.
That's it. So it's like, you know, and we've used the metaphor sometimes of surfing to compare it. You know, nobody can stop you taking a surfboard into the ocean on the North Shore of Oahu and go on those big waves. But wouldn't you think, maybe I should practice a little bit on the smaller waves before I go take the big wave? So I just say to everybody who's watching, who's thinking about this, or perhaps we've enrolled you guys, yes, you can absolutely do this, but you're going to have to study. You're going to have to come up with a plan, and you're going to have to do your due diligence, and then go for it.
See, that's again what I love about this is, you know, number one, like I said, I hope everyone wins, but to me, this madness, I always struggle from using the word easy. I'll never say easy, but I think it's easier now if you're willing to put in the work, because
Agreed.
now we've got, 3 million new Robinhood accounts. And listen, I love Dave Portnoy. I love the guy, but all he says is stocks only go up. And all these people are like, oh, stocks only go up. And if you're willing to study the past and you're willing to study the chart patterns and do all this, you got 3 million competitors over here. And
that's right. That are not prepared for the game.
Exactly.
They think it actually is monopoly right now. And the actual truth is, anybody who's paid any attention to any of the history of Wall Street knows that stocks do not always go up. But for right now, it's bringing a lot of people in. So just think, if you're the only one who maybe just listens a little bit, you are going to be the outlier. You are going to be the one that's going to survive those 3 million people coming in thinking they only go up.
I understand both of your perspectives, and I agree with it. I come from a more seasoned, harder approach from a day when trading was harder, and it's still just as hard. I would say trading is an internship or an apprenticeship to the hardest job in the world.
Sure.
But if you pass the apprenticeship or the internship, it pays the biggest rewards of any job. But it's ultimately the hardest internship to the hardest job that you've ever traded, that you've ever had in the world. And yeah, I mean, right now it seems like the easiest job in the world because stocks just go up, right? Stocks, if you're along, you're not lucky. You can't really lose.
We're joking, but kind of not joking. I mean, and you know this, Stephen. I mean, look at
really
how many.
lose.
One of the, I say this like every day. I start laughing and I say nothing dies, because you know this, how many of these total pieces of crap spike and they may fade and, and maybe you short them and you do well, but how many times this summer, like 2 days later, it's back, whatever it is, the worst stocks, whether it be Mark or Gene. Gene might be the worst stock in the world. GENE. It spiked, and then like 2 days later, it spiked again, and it's like it's just wild, and it's rewarding the people that are just like covering their eyes and waiting a couple days.
But I mean,
so Stephen, did you see this article, or Tim, it was Market Insider, the day trading boom is a welcome phenomenon and has actually helped reduce market volatility, says a veteran Wall Street trader. This was out yesterday. And it's basically just talking about, he feels that all of this influx of new traders is actually helping to keep it and keep that rallying. So he's saying, let them come in, which is kind of surprising. Maybe not, but I was kind of shocked to read that article and think, oh, look at this. A veteran is thinking, hey, come on in.
Well, again, I see his, and that's why I chose the topic today. That's why I wanted to talk about this, because I agree this isn't going to go on forever, but right now I tend to agree with that guy, because it's just like, again, joking about the stocks only go up. It's like every day you have like you have some big company that misses on earnings and it tanks. 2 days later, it's back at highs. It's just like, and when you talk about reduced volatility over time, we see these, we've seen some earning stocks that have dropped. I was thinking, I got my charts up. I'm thinking Netflix, right? Yeah, Netflix dropped. Now it's a few points from back to the highs. They missed on earnings. So I would agree from a math perspective, because people just keep bidding stuff back up. So
he said less irregular trading dips and spikes, and then he said the rise in retail investing has also been a welcome phenomenon. And then many veteran investors have criticized the rise in day trading, predicting it will end badly. But he's figuring right now it's probably helping the market. So I've been, wanting to ask you guys if you felt that was true.
So Stephen's the bear of the bunch. What's your opinion? You think it's going to end badly for everyone? They're all going to go broke. They're all going to blow up their accounts. All 3 million of these Robinhooders are going to be out on the street. That's what you think, right?
What I would say is on a macro perspective for America going into elections with Trump, obviously the boom is going to help artificially prop up the economy. It's not going to prop up the economy, but prop up the stock market. on another level, I'll just tell a quick story. Like I remember 2 years ago, was it 2 years ago when Bitcoin ran?
Yep. Well, late 2017.
It hit
So
19,000.
But
It hit 19,200 and something.
Yep.
I was in
December
England.
2017. Yeah.
Yeah, exactly. I was at home. It was Christmas. I was watching the news in England with my family. God bless them, love them. And I was watching the news, and people were saying Bitcoin's going crazy. Is everyone going to make a lot of money? And the news reporter or the anchor for the BBC said, honestly, all of the speculators, all of the people getting in on it, they're all going to lose on the way up, and they're all going to lose on the way down. And the only people that are going to win are the experienced traders. And it's history repeating itself again, but in the US stock market now. All of the Robin Hooders, all of the new people, there'll be outliers, there'll be some people, but they'll all lose on the way up, they'll all lose on the way down, and the experienced traders will just sweep up like they always do, because experience, hard work, and study pays every time.
Now, I would add this, and I agree with that, well said. Now, I will add a caveat, like we just talked about a little bit ago, but I think that the people that take this seriously, okay,
Yeah,
if you, and again, it drives me nuts when people pick on people with Robinhood accounts. It's like, screw you, buddy. I mean, if this guy or this gal's got $500, let him get a Robinhood account, okay?
Yeah.
Okay.
But my point is, if you're doing the work with your $500 account, if you're reading all these books we talk about, if you're taking your losses, you're not sitting there saying, "Oh, stocks only go up," But I think that if you put in the work, you can also be one of those outliers, just like you were, Stephen.
And I'm the most unlikely outlier.
Again, as a I'm not going to pick on you, but we've talked about this in 150 episodes. I mean, you started out a 100% degenerate gambler, and you'll admit that,
Yeah.
But Tim has talked about this, that you, Stephen, he saw even though there was maybe some naivete in the beginning, he saw that you were probably.
No, it was mostly drinking and drug abuse and womanizing. That was most of it. But
well, that was the polite term I was using for that trifecta. That was my attempt at being the United Nations right now.
As long as my mom doesn't watch this.
but he saw that if you were able to kind of transcend that, you were going to be able to do this. Like he said that many times in our conversations, that he saw that you had the capability.
It's just a relentless drive. It's not even much of a capability. I don't think you have to be that clever to trade stocks, honestly. You need to be average intelligence. You can be a little bit less, you can be a little bit more. It's
just
all about dedication, screen time.
Discipline.
Because I'm the most least disciplined person on earth in every factor of life. You just learn it. You learn a lot. You say
that. But again, you worked your ass off.
I think so.
You had a full-time job. You're YouTubing. I mean, again, you can say you're not disciplined, but you are. Okay.
But it comes with a cost.
Maybe not in all the
facets
of your life. Okay, maybe,
No, I agree. No. I gave up everything for stock trading. Wouldn't put it that way. I gave up friends. I gave up a lot of family. I gave up.
How is that not discipline? That's discipline, Stephen.
Yeah, it's a different kind of discipline. But I'd give it all up and then have a bottle of wine while I studied. Like stuff like that. I'd ease the burden of the sacrifices that I was making. But what I'm curious about though is how the market differs for longs and how the market differs for shorts. Because honestly, there was one squeeze a week for shorts. Now I have my finger, like I have like one hotkey that I use, and it's Command O. O means out. Out is a market order out. and my finger is always on Command O in the vast majority of every trade. And a hotkey for that only actual order. It's the most important thing because the way that people get squeezed the most times is they get shocked. It goes against them. They try and put the order in. It goes against them again. Then they think, I can't get out now. Yep. The best thing you can ever have is just one hotkey. Have your finger on it, tap it the minute you get squeezed, and that you never put yourself in the horrible situation of having to make that call.
Does that work on every laptop or every platform?
you can put it on pretty much any platform. You can have
can.
hotkeys. Yeah. So
Okay, that's
I mean,
great.
the process would vary, but yeah.
How many hotkeys can you have? Can I have all of them, please?
All of them. Yeah, you even have like hotkey W for win. You just tap hotkey W. It's like win.
Want to win, never
rich,
want to
rich.
lose.
But yeah, I mean, you make a great point, because I mean, and that's the thing with right now is, again, like you said, if you don't get out in that initial spike, then you start playing that justification game, and then you're like, oh, I'll cover into a dip, and just especially right now when you get those, again, I think of Gene. I know I keep kind of bringing it up, but man, that was
crazy.
When was that? Let me look up the day just so people can reference it. Would have been the 14th.
2 weeks ago.
Yeah, the 14th of July. Gene, like, I mean, it like broke the high. It like spiked, consolidated, like 6 times in one day. And if you didn't do what Steven said, I mean, you just keep getting, it would just keep paralyzing you over and over again.
No, and this is so important, because there's a fundamental trading rule that goes back years, if not decades, that I've changed in my trading that I want to check with Tim Bohen, because he's a veteran. But every trader says don't cut stocks randomly, cut them at key levels. But in this new market, when I see something about a squeeze, I don't wait for the level. I cut it before it happens, because the probability of this happening is significantly higher. And what do you think about that, Tim? Because it goes against the fundamental rule.
Well, now keep in mind, to the listener, we're specifically talking about on the short side, on the big runner of the day. 100% agree, because to me right now, listen, if even though I'll try and remember, I'm the angel on your shoulder and Steven's the devil. Okay. I'm trying to beg everyone not to short these low float big runners. But if you are, I totally agree. And what I would be doing right now is having a max dollar amount loss, where you're like, I don't care what the stock is doing. If I'm down 100, if I'm down 150, I'm down 500, whatever your risk tolerance is, you're gone. You're gone. That's how I would. I wouldn't be looking at previous resistance, because you know what? Right now, previous resistance doesn't matter.
Doesn't matter.
So that would be my tip, and I totally agree. Just have a max loss based on your account size. Maybe it's $10, maybe it's 10 grand. I don't know. But if you're shorting these things, when that comes, you're out.
Do you guys feel like, I mean, I almost feel more hesitant to start trading now because of the craziness. So what do you guys feel about like the infant baby traders? Is this the
I'm going to throw that baby into the bathwater, man.
Okay. Great.
Or should you throw it out with the bat? Well, whatever.
Yeah.
Hot water burn baby. That's what I'm going to do. I'm going to pull a crap. What was his name? Hot water burn from Rain Man. What was Rain Man's name?
Oh, I can't remember. Dustin
anyway,
Hoffman.
There we go.
Raymond. Well, Raymond? Was it Raymond?
We'll move on. Anyway,
okay.
I say.
Yeah, I think it was Raymond, because he couldn't pronounce Raymond, so he called him Rain Man. I don't know. Maybe that was the brother. So.
My joke probably failed. But in my opinion, I'll let Steven answer. No, jump in. Just trade small size,
Really?
Or paper trade, whichever you want to do. But I think there's no better time to learn than right now. You go.
Okay. But do you feel like what I would be learning is going to be applicable later? You see what I mean? The craziness, like this isn't going to last forever. So what if I go in now? I guess I'm afraid, like, what if I think certain things are going to go a certain way now and then they'll never happen again? Is that just a bet? That's me being overly cautious, maybe.
The market has changed quite radically, but at the same time, I don't think it's changed radically. I think it's more, all of the patterns are the same. Some of them don't stop working, but most of the patterns are the same. They all just like went up on turbo a little bit. So for me, like, as a long, you might get an extra 20%. As a short, you might short an extra 20% higher, because there's another 20% of buyers in the market. That's the best way I can kind of just, and I had to change like first red day. I'd asked Tim, like, what patterns do you play more or less now as the market's changed? Because I stopped. First red days work again now, but they didn't used to work. I short a lot of trend breaks on overextended trash because trend breaks are a really easy entry on something overextended with a tight risk. But I was just curious, how's your game changed?
Same patterns. I think if anything, though,
oh, dude, your dipping rips. My God, your dipping rips. My God. I bet your Mora's on there.
Yep. I mean, I think, again, I think they're the patterns we talk about the most, that morning, that dip and rip that Steven's talking about. We got YouTube videos. We talk about a lot. That's that heavily shorted low float stock that pulls in the open and then breaks the high of the day. Those are working. The VWAP holds are working. And I mean, the red to greens are working. The ABCDs are working.
Anything long wicks. I
don't want to say that, but I tend to agree. It's like, but here's my point, Kim, back to part of your question. I think now time will tell, but I think this is just the new normal. I don't think it's changing because here's the thing. And I know, and I know we all have our different opinions on Dave Portnoy, but I use him as an example because here is a guy who's an adrenaline junkie. Okay. Remember, he was all about sports betting. Okay. Sports betting, high risk, put $1 million on the Packers game. That's him. He's now come to the markets because of no gambling, because of no sports, and he is infatuated with it. And I joke about this on my Twitter all the time. When sports are back, I don't think he's going back. And I think there's a lot of people that used to get that fix. Yeah. They were jonesing for the action and they would go to sports. They would go to the horse track. They would go to the casino. And I think what the stay-at-home order changed is you couldn't go to the casino. You couldn't bet on sports. And I think you have millions of people that aren't going back. Now, for right or wrong, but I think in like the next few years, I just think it's going to stay like this because even when basketball and football come back, I think there's going to be there's 3 million Dave Portnoys out there that are like the markets are way cooler.
and they're doing well, right? And maybe just by luck. I mean, the first time I got taken on my 13th birthday to the horse track, and my dad gave me $2 for every race.
Are there horses at the horse track?
At the horse track. Did I say it? What am I saying? Did I say it wrong or with an accent? I don't. At the horse track, I went to Belmont on Long Island, and he gave me like $2 for every race, and it was a daily double, like forced daily double, and I won $182. He was kind of annoyed. Because he's like, what the hell? How is she picking the right horses? And I can tell you, I was jonesing to go back to that horse track after that. I was like, can we go again? Because once you win, you associate the winning with, so that's part of why maybe I'm a little bit nervous about going in now, because I feel like, well, what if I just get lucky and then, you stay too long at the dance, and lose.
Hard work comes in.
Yeah, exactly. And again, listen, we if you listen to us, the Kim, the only real danger is, in these markets, again, yes, we're talking about how wild it is, but the only danger is if, cue the sound effect for Tim's favorite quote, is if you don't have a plan. If you're bag holding, that's the danger. But you can trade, you can short the craziest runner ever. As long as you have a stop, there's no danger. Now,
all right. So, Gene,
don't stop out, then things get bad.
What did you say about Gene before? Like, what? Explain to me what that was about and what happened, and how you handled it. Like, did you see? Just explain that to me, because I heard you say like it went up and down, up and down.
Well, no. Basically, what we were talking about is, again, on the 15th of July, Gene, spiked from 1 to 2 in pre-market. Then after the open, spiked from 2 to 4, and then middle of the day spiked from 6 to 9, and then at the end of the day spiked from 8 to 10 plus. So what we were getting at is this was one of, Gene is known, GENE is known for being, quote unquote, one of the worst stocks ever. Okay. Wow. And so what's happened to people is they short these things when it was up 100% in pre-market ish, maybe 80%. And if you don't, and back to what I was saying, I mean, if you don't stop out on Gene early in the day, then things are really bad. Then you blow up. Then you're gone. But as long as, I mean, it was a crazy liquid stock. It traded 300 million shares that day. You could have gotten out, you know, if you had your hotkey, you know.
Yeah.
But can I just add, because it's kind of irritating. Trading is only risky if you have bad risk management, because if something's risky, half your risk, and then it's half as risky. If you still find it risky, divide your risk by 4, and then it's not risky. If you want more risky, triple your risk. The risk is factored by your size. Trading isn't risky. It's only risky if you make it risky. If you have bad risk management, it's risky though, of course.
See, and great point, because Kim, you know, the reason we caution against these blow-ups all the time, and you're probably scared because we're like, blow-ups. Totally. The only way to blow up is having too much size, like Steven said. I mean, you can learn day trading 10 shares at a time. And listen, if you got 10 shares of a $1 stock, it doesn't really matter what it does. I mean, if it goes to 100, you know, that's bad, but it's $1,000. I mean, it's not like it's the absolute end of the world. Totally. Now, if you got 1,000 shares of that stock, and
you got a problem.
And it goes to 100. Well, you got a problem. Yeah.
Okay. All right. This is good. It's really,
and that's a huge mistake. And that to the listeners out there, man.
Yeah.
If you're, the thing I always say is, you know, and I know Steven and I go back and forth on paper trading, and I agree to a certain extent. I lean towards the cautious side because I know where the bodies are buried. Okay.
Yeah.
15 years of this. I've seen so many people come and go. And so, but I do agree with Steven that at some point you got to have some skin in the game. If you're going to put skin in the game, just do it with something that, even if you make the worst decision in the world, you're not missing a mortgage payment because of it, you know?
Yeah, for sure.
But I would say that the real risk in the game is for people around 2 years, 3 years in, when they're thinking that they've got it, they're starting to size up. And all of a sudden,
I remember those days.
I still may be in those days. I'm not sure. I'm hoping that I'm out of them. But you have a 2K month, a 3K month, a 2K month, and then you lose 20 grand. And you just think, what the hell just happened? And then you need to reevaluate and think, is trading for me? Can I go through this game 12 more months to make this money back? Because you know you can, but you don't know if you can trust yourself. And that's where trading's risky. In the early days when you're learning with a small account, I think for me, paper trading, real trading doesn't matter. As long as you're trading small, the real risk is when you think you've got it.
Did you just hear that, Tim? He just kind of didn't demonize paper trading for the first time.
For the first time, yeah.
No, I did. There's no point in paper trading. Now that commissions are free, there's no point in paper trading ever.
Well, again, I agree. That's the and actually that's a great point.
You agree?
Because of commission-free trading. The bummer in the past was, even if you were trading small size and you could be winning, but it would be, one step forward, 2 steps back, and all of a sudden, if you've got that $500, $1,000 account, you could be winning, but your equity curve would be dropping. Now with Robinhood, now with a lot of E-Trade, all this commission-free stuff, that doesn't happen. So that is definitely a change. But Steven, you mentioned basically what you're talking about, and we've talked about this, but that's that Dunning-Kruger effect. Okay. We'll probably link it in the show notes. I'm guessing. That's and it happens with everything. It's like you hit one fastball and you're like, oh man, this is easy. Next thing you know, you strike out 15 times in a row. So that is that. I agree. For whatever reason in trading, it seems to be like that 1 to 2 year mark where the peak of the Dunning-Kruger comes, and you're like, oh, I got it. Add size, and then all of a sudden that slam back down.
But how lucky for everybody to hear that now, because it's like, okay, just put the buffers around you in a year or two. As soon as you start to get that sense of cockiness or sense of like, oh, this is easy. I mean, that's part of what has me a little cautious about that particular person who's telling everybody that stocks only go up, is I feel like he is potentially misleading people into realizing that like gravity is not what it is. Like whatever goes up always comes down. So it's like how you can't tell people that, especially when they are perhaps just trusting everything you say. So I'm just like, people just question the people you're listening to, ask for evidence, and then test it against the way life works. Like if it sounds too good to be true, it's probably too good to be true.
Yeah, and one point I want to make, and this is another quote. I do terrible job on attributing quotes, but it's one of my favorite ones. And if you're listening, maybe write it down. I mean, in my opinion, and again, I took this quote because I like it so much. The quote is, there's only one thing in trading you can control, and that's how much you lose. Okay. Mm-hmm. So, you can have a process, you can align everything, you can determine everything. But at the end of the day, you're the one pressing that exit button, whether you're buying to cover or you're selling to get out. And remember, that's the one thing you can control. And back to that Dunning-Kruger effect, I think that's where people trip up. They have that success, and then they start thinking that, I can, work my way out of this, I can add to a loser. But if you remember that choice is yours, and if that loss is bigger than you wanted it to be, that's on you, because that's the only thing you can control. So
it's a good quote.
I just want to counter it again. I'm being the devil's advocate today, but I just want to ask you guys how you've learned things growing up. It sounds obscure at first, but I remember when I was young, my mom would tell us not to do. Maybe I'm just mischievous. My mom and dad would tell us not to do things. When I say us, it's just me. They'd tell me not to do things, and I would do it, and then I would think, my mom told us that, and then I made the mistake, and now I've learned. And with trading, is it not the same that someone tells you not to do something, you make the mistake, you feel the pain, because a lesson is only really learned when there's a strong emotional bond to that lesson. And when you get told it, there's not a strong emotional bond to it. I'll learn through pain and suffering, in the stock market at least. But for you guys, is it not the same? We can tell people, they'll be like, but they'll make the mistake.
I mean, it bums me out, but you are right to a certain extent, because it's like you can say it all the time, but and I'll get asked this a lot, whether it be on a webinar or wherever, and they're like, how do you quit taking the big loss? That's always the big question. And my answer is always, at some point, you're just going to get sick of it, and you're just going to be like, I am not effing going to do this again. And you can listen. I'm glad everyone's listening. Or you can watch YouTube videos, or you can read the books. But if you're taking those big losses, at some point, you just got to be like, no, fuck this. I'm not doing it again. It hurts.
And you do. I had 3 years, and I'm still taking them. But I take them significantly less than I ever did. And you said the same, Tim.
Yep. You
were like, I just took less. You still mess up sometimes, but I mess up less and less and less and less and less.
And the part of that pain is, you recognize that you now that emotional memory, and this is obviously Kim's specialty, but it's like that lizard brain is like, hey, we've been here before.
And it knows, right?
It hurts.
And it knows.
It hurts, and I don't want it to hurt anymore. I was good though, Stephen, in my childhood. I listened to all the rules.
Really? Well, then maybe you'll be the top trader.
I don't know about that, but I definitely followed the rules, because I just, I don't know. I think I just remember the look. I just didn't want that look, because that look was like, but
there's two types of traders though, right? There's the aggressive ones, and there's the risk averse ones. And we both have our own problems. And there's so many traders who can't pull the trigger. Or they'll get nervous and they can't take something aggressive that they should take. Or they'll hesitate and then they'll miss the move. And that's a real trading flaw, as well as being too aggressive.
Well, and that we'll kind of take this home here, but I mean, that segues into, one of the greatest trading. I know I'm a quote machine, but you nailed it with there's old traders and there's bold traders, but there's no old bold traders, But again,
that's the best quote ever, by the way. That's the best quote ever, by the way.
You got him.
I love that.
I mean, you see that on the podcast here. Steven's trying to
be okay.
Steven's trying to talk this newbie Kim into short and low floats, and I'm like, no. So
that's awesome. That's awesome.
No, but I mean, I'll be short and low floats for the next 10 years. I'd imagine. I think I'll be short and low floats for the next 10 years. But I don't short the same low floats that I used to short. There's a lot of low floats that I miss. Like for example, today.
That's good.
Today is the what? It's the
MYOS. Yep.
5th of August. I messed that up.
Which, by the way, bad. MYOS, they make protein powder for dogs, which is pretty dope. So.
No way. That is crazy.
It's a piece.
I don't even know if that's true.
Okay. I'm like, these dogs, the animals are like, people are making millions of dollars off food or treats for animals. I would have been surprised.
Chewy's been an incredible swing trade this year, man.
Because all these dogs now, I think these animals, people are staying at home and they're paying attention to their pets, and they're like, you know what? I should probably get you a better bed. I've seen more beds sell out of Target when I went a couple of weeks ago. Everybody had a new cat or dog bed. I was like,
Chewy's at 52-week highs as we talk. So
what the heck? All right, so you're lying though about that stock being a protein for dogs.
No, they didn't. That's what they do. So and it was up like 150% today.
But do you know what we need to do an episode about? Kodak, because everyone thought Kodak was a short on the first day, and then they found out that Donald Trump thought, you've got loads of factories all across the United States. We need to create more drugs. You can use those factories for drugs. Kodak was not a joke, and it was not a short. So stop hating on low flow penny stocks, because you don't know which one's legitimate and going to 50. You don't know.
And actually, that's a great point. We'll probably save that for next week.
The whole of that episode, yeah.
So
Bitcoin's running right now. What the hell's going on with Bitcoin? A few things going on right now.
Yeah, electric vehicles are running, the SPACs are running, crypto's running, the crypto related stocks, Kodak, it never ends. So, all right, that being said, we kind of all over the place a little bit today, but I think we kind of stuck to the fact, if we were a little all over the place, just so the listener knows, this is the first time we've recorded together in 2 weeks, so I think Kim, Steven, and I were doing a little bit of catching up as well. But I think we did really hit the point that I think it's the greatest time to be learning this stuff. Now, notice I said learning it. I didn't say it's necessarily the greatest time to be trading. Okay, maybe not put your money at risk yet, but if you're diligent, if you're working hard, you're tracking your data. We did an episode recently with Steven where Steven had an epiphany after tracking his data. You know who's not tracking their data? About 2,999,999 Robinhood users.
That's right.
Maybe 5 of them are, okay? So if you're doing that work, if you're diligent, you can succeed right now. Steven, go ahead and take us out. So
No, just the only other thing that I want to add is there's like 5 stages to growth, because I think the most important thing when you're trading to get better is learning from mistakes, which means going back over old trades. And everyone says go back over old trades, but it never sinks in with people. Like seriously, go over old trades. So look at pattern by pattern. How did you trade the gap and crap? How did you trade the first red day? How did you trade the first green day? How did you trade the double bounce? And think, where was I right? Where was I wrong? Where I was wrong? How was I wrong? How can I be better? What was missing that time? That's ultimately the best way to get better. But to get to that point, you have to go through the DVDs, the courses, the guides, because you need to learn everything that makes those patterns happen. Yeah. So I would say get into education, spend a good year or 2 years in it. And then when you feel like you understand all of the variables of the market, then start being self-critical, self-analysis, and you will prosper in this new booming market. And that's it. And it's the truth. So
Well said. Well said. All right. Well, thank you, Kim. Thank you, Stephen. And thank you to everyone out there. As always, we kind of started out talking about that Wall Street Journal article. We'll have everything linked over at SteadyTrade.com. So if you're listening on iTunes, you can always head there. Sign up for our newsletter, by the way. Actually, Matt and Bryce and I are working on that. Every Friday afternoon, we kind of do a digest of everything that Matt's doing on the This Week in SteadyTrade, what we're doing on the podcast, dropping in some of the stuff that I've been doing on the Instagram lives and stuff. So it's a great newsletter, free newsletter, and goes out every Friday afternoon. So check that out on SteadyTrade.com. Thank you, everyone. Thank you, Kim. Thank you, Stephen, and we'll see you next time.